stop, addicted to the shindig. Chop top, it says I'm gonna win big. Choose not to life of imitation. Distant close to the reservation.
Hello everyone! Today we are presenting on Spritzer Berhad. Spritzer is Malaysia's top bottled water company with over 30 years of experience in the industry. They use a smart business model where they make their own plastic bottles and caps to control costs. Their famous mineral water is extracted from clean, underground sources in Taiping, Perak, which are naturally protected. Besides the main Spritzer brand, they also own well-known brands like Cactus and Summer. For the industry and strategy analysis, the Malaysian beverage industry continues to grow due to stronger consumer spending, tourism recovery and increasing demand for clean drinking water. However, companies also face challenges such as stricter environmental regulations and rising packaging costs. To stay competitive, Spritzer leverages its unique silica-rich water source in Taiping, uses automated technology to improve efficiency and focuses on sustainability through recycled packaging and solar energy. The company is also expanding its range of healthier beverages to support future growth. To do this clearly, we chose common size analysis as our primary tool. For those who might not be familiar, this tool basically turns big complicated financial numbers into simple percentages. This is incredibly helpful for a company like Spritzer. Why? Because Spritzer doesn't just sell bottles of water. They also manufacture their own plastic packaging, run an eco park, and even invest in agriculture like durian plantations. Let's look at the statement of financial position or the balance sheet to see how the company is shaped. Over these 5 years, Spritzer's total assets grew massively, going from around 558 million ringgit in 2021 all the way up to 863 million ringgit in 2025. A huge part of this growth came from their property, plant and equipment, which rose to 551 million ringgit by 2025. This shows us that management has been investing heavily in automated factories, packaging plants and warehouses to keep up with high demand. On the other side of the balance sheet, total equity increased from 463 million ringgit to 658 million ringgit, mostly because their profits kept growing from year after year. Even though their total liabilities went up to 205 million ringgit by 2025, the company realized much more on its own money than an outside debt, making it a very stable business. Now, if we look at the common size statement of financial position, these trends become even clearer as percentages. For instance, look at their non-current assets. In 2021, long-term assets made up about 58% of the company. By 2023, that jumped to over 70% before settling at around 65% in 2025. This tells us that Spritzer locks up a large portion of its capital in hard assets like machinery and factories to run its business. When we look at how they fund all of this, their equity consistently stays between 75% and 83% of their total capital over the 5 years. Meanwhile, their total liabilities only hover around 17% to 24%. This percentage breakdown is proof that Spritzer runs a very low-risk operation. Now, let's talk about how the company actually makes money by looking at the statement of financial performance or the income statement. In 2021, sales were at 331 million ringgit. By 2025, sales almost doubled, reaching over 657 million ringgit. What's even better is that their financial net profit climbed every single year. It started at just 24 million ringgit in 2021 and surged to nearly 91 million ringgit in 2025. This means Spritzer isn't just selling more bottles of water, they are actually getting much better at keeping their costs under control as they grow. Finally, let's look at the common size income statement. If we look at their raw material costs, back in 2021, raw materials swallowed up 38.6% of their revenue. But by 2025, that expense dropped down to just 27.3% of sales. This is a massive improvement. It shows that by making their own plastic bottles and buying materials in bulk, Spritzer successfully protected itself from inflation. Because they saved so much on raw materials, their final profit margin for the year improved from 7.3% in 2021 to 13.8% in 2025.
First, the liquidity ratio showed that the Spritzer maintained a strong ability to meet its short-term obligation. The current ratio decreased from 3.17 in 2021 to 1.93 in 2025. The quick ratio also stayed above 1 throughout the period and stood at 1.6 in 2025, indicating that the company could meet its short-term commitment even without relying heavily on inventory. In addition, the average collecting period remains stable at around 76 days, while the day to sell inventory increased slightly to 99 days in 2025. Next, the efficiency ratio shows that how effective Spritzer uses its resources to generate sales. The cash turnover ratio peaked at 26.83 in 2024 before decreasing to 14.73 in 2025. The inventory turnover ratio and account receivable turnover ratio remain relatively stable, showing efficiency in inventory management and customer collection. Meanwhile, the fixed asset turnover ratio improved from 1.05 to 1.19, while the total asset turnover ratio increased from 0.59 to 0.76, reflecting better utilization of the company asset. Moving on to the profitable ratio, Spritzer demonstrated a strong growth in profitability over the 5 years. The gross profit margin increased from 61.41% in 2021 to 72.70% in 2025, while the operating profit margin rose from 9.33% to 18.65%. The net profit margin also improved to 13.82% in 2025. In addition, return on asset increased to 10.52% and the return on equity rose to 13.80%. Finally, the solvency ratio, indicating that the Spritzer maintained a stable long-term financial position. The debt ratio remained below 30 throughout the period and stood at 23.76% in 2025. The debt-equity ratio was 31.17%, while the long-term debt-to-equity ratio remained low at 0.0762 times, showing that the company relied on the more shareholder fund rather than debt financing. The time interest earned ratio increased to 58.77 times in 2025, indicating that the company could comfortably meet its interest obligation.
The statement of cash flow is important because it shows the actual movement cash in and cash out of the company, while the income statement shows profit. The cash flow statement helps us understand whether the company is able to generate real cash from its business operation, how much it reinvests into the business, and how it manages its financing activities. Spritzer Berhad's cash flow can be divided into 3 main categories, which is operating activities, investing activities, and financing activities. First, for operating activities, Spritzer shows a strong improvement over the 5-year period. Net cash operating activity increased from 35.58 million ringgit to 153.71 million ringgit in 2025. This is a significant increase and it shows that Spritzer's core business operation become much stronger over time. Operating cash flow is especially important because it reflects the company's ability to generate cash from its main business activity, such as producing and selling bottled water and beverages. The strong increase in operating cash flow suggests that Spritzer was able to improve its sales performance, control its operating costs, and manage its working capital more effectively. In 2025, the company recorded cash generated from the operation of 165.60 million ringgit after receiving interest and tax refund. And after paying income tax, the final net cash from operating activity was 153.71 million ringgit. This shows that Spritzer business model is highly cash generative. In other words, the company is not only profitable on paper, but it also able to convert its profits into actual cash. Next, for investing activity, Spritzer recorded cash outflow throughout the 5-year period. In 2025, the net cash used in investing activity was 83.68 million ringgit. The main reason for this outflow was the purchase of property, plant and equipment, which amounted of 45.24 million ringgit in 2025. This indicates that Spritzer continued to reinvest in its business The investment in property, plant and equipment is important because it helps the company expand its production capacity, improve efficiency and strengthen long-term operation. For a manufacturing-based company like Spritzer, continuous investment in production, facility, machinery, warehouse system and automation is necessary to support future growth. Although investing cash flow is negative, this should not be seen as a weakness. In this case, the negative investing cash flow reflects growth and expansion. Spritzer is using cash generated from its operation to invest in long-term assets that can help the company remain competitive in the bottled water industry. Moving on to financing activity, Spritzer also recorded net cash flow in most years. In 2025, net cash used in financing activity was 47.25 million ringgit. This was mainly due to dividend payment of 25.47 million ringgit, repayment of revolving credit, finance costs, repayment of banker acceptance, and lease liabilities. The dividend payment shows that Spritzer continued to reward its shareholder, and this is a positive sign because it reflects management confidence in the company's financial position. At the same time, the repayment of borrowing and finance costs show that company is also managing its financial obligation responsibly. From an investor perspective, this is a good sign because the company is not only expanding its business but also maintaining shareholder return and controlling its debt commitment. Overall, Spritzer cash flow position improved significantly in 2025. The company cash and cash equivalent is increased from 21.58 million ringgit in 2024 to 44.60 million ringgit in 2025. This means that Spritzer ended the year with a stronger cash balance and better liquidity position. This improvement is important because a higher cash balance gives the company more flexibility. It allows the Spritzer to support daily operation, invest in future expansion, and manage unexpected costs and continue paying dividend to its shareholders. In conclusion, Spritzer Berhad demonstrates a healthy and improving cash flow performance. The company generated strong operating cash inflow, continued to invest in long-term business growth, and manage its financing activity effectively. Although investing and financing activity recorded cash outflow, these outflows were mainly related to expansion, asset investment, dividend payment, and debt management. Therefore, based on the cash flow analysis, Spritzer appears to be financially stable, operationally efficient, and capable of supporting future growth in the Malaysian beverage industry.
Prospective analysis is used to estimate the company's future financial performance and financial position based on its historical result and a set of reasonable forecasting assumptions. The purpose of this analysis is to determine whether Spritzer Berhad is expected to continue its growth and maintain its financial stability in the future. Before preparing the projection, I first analyzed the company's historical financial performance for the year 2024 and 2035. Based on the financial statement, Spritzer Berhad recorded strong growth in 2035. Revenue increased from approximately 579 million in 2024 to 657 million in 2025, representing a growth rate of 13.45%. At the same time, profit before tax increased significantly from 79.36 million to 120.40 million, while profit after tax increased from 71.11 million to 90.76 million. To forecast the company performance for 2026, several assumptions were made. Firstly, revenue is expected to continue growing at 13.45%, which is based on the actual growth achieved between 2024 and 2025. Secondly, key profitability indicators such as the profit before tax margin, net profit margin, and effective tax rate are assumed to remain relatively stable. For the balance sheet projection, asset and working capital are assumed to grow in line with revenue growth. Meanwhile, liabilities are projected to grow at a lower rate of 5%, reflecting prudent financial management and controlled borrowing activities. In addition, dividend payout ratio of 35% is assumed based on the company's historical dividend distribution policy. Based on the assumption, the projected income statement showed that revenue is expected to increase to approximately 745 million in 2026. Profit before tax is projected to increase to 145.18 million, while profit after tax is expected to reach approximately 109.44 million. This projection indicates that Spritzer Berhad is expected to maintain positive earning growth and continue generating strong profitability in the coming year. Moving on to the projected balance sheet. Total assets are expected to increase from 862.69 million in 2025 to 893.50 million in 2026. Total shareholder equity is projected to increase to 687.67 million due to higher retained earnings generated from increased profit. At the same time, total liability are expected to remain relatively controlled at approximately 205.83 million, demonstrating that the company is able to finance its growth without excessive dependence on debt. Next, I will discuss the projected financial ratio. The revenue growth is expected to remain at 13.45%, consistent with the forecasting assumption. The profit before tax margin and net profit margin are also projected to remain stable, indicating that the company is expected to maintain its profitability despite business expansion. One of the most notable improvement is the return on equity, which projected to increase from 13.8% to 15.92%. This suggests that Spritzer Berhad is expected to generate better return for its shareholders. In addition, the debt ratio is projected to decline slightly from 23.77% to 23.03%, indicating a stronger capital structure and lower financial risk. The company liquidity position also remain healthy, with both the current ratio and quick ratio remain stable. This suggests that Spritzer will continue to sufficient current asset to meet its short-term obligation. Overall, the prospective analysis indicate that Spritzer Berhad is expected to achieve continued growth, stronger profitability, and a stable financial position in 2026. However, it is important to note that these projections are based on assumption and may be affected by external factors such as change in consumer demand, fluctuation in raw material cost, inflation, economic condition, and market competition. In conclusion, based on the projected financial statement and financial ratios, Spritzer Berhad appears well positioned to sustain its growth and maintain its financial strength in the year 2026.
As for the recommendation, based on our financial analysis, we propose 4 key recommendations for Spritzer Berhad. First, the company should continue strengthening its working capital management by improving receivable collections, monitoring inventory levels, and maintaining adequate cash reserve. This will support liquidity while ensuring smooth operation. Second, Spritzer should sustain its profitability growth by maintaining effective cost control measures and focusing on higher margin products. This will help preserve its strong profit margin and shareholder returns. Third, the company should continue its prudent debt management strategy, although Spritzer has a strong solvency position with a debt ratio below 30% and excellent interest coverage. Reducing reliance on debt will further strengthen financial stability. Finally, Spritzer should continue investing in expansion, innovation, and sustainability initiatives. This investment will support long-term growth, improve operational efficiency, and enhance the company's competitive advantage in both domestic and international markets. In conclusion, Spritzer Berhad has demonstrated strong financial performance throughout the 5-year period from 2021 to 2025. The company achieved consistent growth in revenue, profitability, and operating cash flow, reflecting effective management and strong market demand. Its liquidity position remains healthy, while efficiency ratios indicate effective utilization of cash, inventory, receivable, and asset. In addition, the company's solvency position is strong, supported by low debt levels and excellent ability to meet interest obligations. Overall, Spritzer Berhad has maintained a solid financial foundation, strong operational performance, and sustainability growth prospect. With continued focus on efficiency, prudent financial management, and strategic expansion, the company is well positioned to achieve long-term success and enhance shareholder value in the future.
What did I miss?